Hello, everyone. Welcome back yet again to Punch Card Investing. We're on episode like 26 or 27 now, so that's pretty awesome. And Karan and I are in the same room again, and things might get a little hairy. I don't know because we've had our YouTube beef going. We haven't really talked since. We'll see if we can settle things here. Not over REITs, but maybe a discussion about Asos coming up, the fashion retailer that's gotten a lot of attention in the value investing world. Brad, meanwhile, is he's actually on his way back from Turkey right now. We'll see if he ends up making it back home in time to rejoin the stream. But he was doing some more due diligence on Races today. He took a quick kind of round trip flight, same day to Turkey, and is coming back to the Bay Area. So hopefully we'll see him as long as he gets back soon enough. How's everyone doing today?
Doing good. I think I'm starting to go slightly mental and lockdown here at the moment, but hopefully we'll be out soon.
That sounds about right. Well, my firm just started requiring people to come into the office again, so that's been fun. 3 days a week, so like partial virtual, partial not. It had been optional before, so that's been a change. Actually seeing like almost the whole team most days. Except today I went in and there was only one other person there, and that was a little weird, but it's been good.
I seen you posted that nice view of Chicago from top floor or wherever you are.
Yeah, not quite top floor. That was on the way up to the top floor. I'm not on the very top, but
what's it like, the 40th floor? 40th.
The picture was from the 66th, and then I'm on the 80th. So I'll have some more from the 80th coming up soon. I took some more pictures today, but didn't want to flood Instagram with a bunch of skyline pictures.
Who owns that? Is there any way that Karan can buy that via a REIT or
the Willis Group? I think they just. I haven't followed it too closely, but the Willis Group bought it from Sears a while back, or at least they bought the naming rights or something. And I believe they're about to sell it to someone else. So I don't know, Karan, maybe you can get in on that, to get in on your REIT action.
So indirectly, Seritage did get the money, right? Like,
yeah, right.
Then,
yeah, that's it. That's a good way to think about it. Long ago. It looks like, is that who I think it is? He's back from Turkey. Is that Brad Kellner, the stock compounder? Did you finish your due diligence, Brad?
Yes, I am done.
Well, let's shall we dive into some Asos? And I don't even know where to start on this one.
Well, we could start with questions. We could do something unusual here.
Brad, can I flip it to you though? Since I know you just got back, so I don't know if you're ready for it, but I know you just did your kind of overview video on what's going on with Asos yesterday. Or is it yesterday or 2 days ago? That was a really good video. So I recommend people check that out if they haven't already. But I don't know if you want to give us like a scoop on just kind of the basics, what the business is, and maybe how it came up on your radar, and we can go around the horn on how we heard about it.
Yeah, sure. Well, I think like most people, it showed up on my radar because of reading Richer, Wiser, Happier. Nick Sleep, sold half of his Amazon stake because it was just such a massive chunk of his net worth. And I think the money sat there for a year, maybe even 2 years. He wasn't quite sure what to do with it. And then he plowed it into Asos. So that's kind of what triggered me diving in. I really scoured, all of my favorite places to go for where great investors share their investment theses for companies, and there was nothing on Asos. So that was a little bit disappointing. But there are actually quite a few solid videos out there on YouTube about Asos. So I perused a lot of those, and my understanding of Asos, it's kind of a fast fashion online retailer. They're really trying to spread quickly outside of UK, where the company is based. And the US seems to really be one of their kind of core markets that they're targeting, really expanding rapidly into. But the big news lately is the CEO stepped down with immediate effect. And that was a little puzzling, I think, to a lot of people. It was said, he didn't want to sign on for at least half of the 5-year plan that Asos had. But we're not getting the full story on why he's leaving, I don't think. And so it's a really big question mark, right? There's a lot of uncertainty for investors in Asos when you don't know who's going to be, the captain of the ship. So that's a big part of why I'm not diving too hard headfirst into Asos. I really want to know who the CEO is going to be and what kind of track record do they have in this particular industry. So, I kind of scratched the surface and I haven't gone too much deeper, and I don't know that I will until that big question is answered for me.
But the founder is still involved, right?
The founder is still involved. I don't know to what extent. He has, I think, a little over 3% of the company the founder owns. So it's definitely a significant portion of his net worth, which is good to see. I think Nick Sleep mentioned him in the Nomad Investment Partnership letters as, someone he really respects, someone who's, doing this work, not because he needs the money. He's not really in it for the money. He's in it because he's excited to grow this business. So that's a really good sign that there's kind of alignment of interest there from the founder. What do you guys got?
To the man. Go ahead, Tom.
Yeah, I was just going to say, it got on my radar for similar reasons, like reading Richer Wiser Happier and hearing Nick Sleep, had bought into it. And I think in Richer Wiser Happier, it said we got kind of vague date ranges on exactly when he purchased, but, guessing a little bit, maybe bought it first half of 2020. And it said in the book, it's already doubled. And since all this news has come out and Asos have had like supply chain issues and stuff that they're struggling with as well, the stock's come back down to earth. I think it's down over 60% now from where it had been kind of within the last year or so. So I think that's got a few people interested in it as well.
Right. Mm-hmm.
My question on the management situation is obviously not a good thing. I don't think that would ever be a good thing unless the manager before was like terrible, then it's like good riddance. But in this case, that's not my understanding. It was a pretty good manager that is leaving. But if the business is simple enough to run, or maybe not simple, but it's not like a particularly complex sort of thing that where, the Buffett quotes or where it's like eventually an idiot's going to run the business. So you want a business that an idiot can run, that sort of thing. Right. Is this one of those businesses? It's fast fashion, it's logistics. And yes, there are complications with any sort of business, but compared to some of the more complicated businesses we talk about, maybe like an Alibaba, which does have a big e-commerce portion as well, but has so many sub businesses that it gets very complicated. Is this one of those businesses where management maybe isn't as important or isn't as critical as it might be in some other ones?
It's a great question.
So I had thoughts on that. I'll let you go, Frank. I had thoughts on that, but then I saw after dinner investors' recent comment about the bathtub. No, I just stuck there. Sorry. Go ahead, Frank.
I think it's a terrible time to be going through a change of management for Asos. They're really spending there's a lot of reinvestment going on. It's like a critical time period this next 3 to 4 years where they've said they can increase revenue from, I think they're about 3.8 billion now, and they want to get to 7 billion. And they're spending a lot more on CapEx. There's a lot of reinvestment happening during that time. And with a change of management, I think that's definitely concerning. There's a lot of execution that needs to happen. So I'd probably be staying out until we do have some more information about the new management team and how they're kind of thinking about this plan, whether they still want to go ahead with this plan moving forward. I don't know. I think there's a lot of execution risk right now. So management's definitely important.
Yeah, I mean, it's an online fashion retailer kind of focused at 20-somethings, I think, is sort of their tagline. And I think it's the type of business that, once they've gone through all the CapEx and set up networks and new locations and so on, I think it's the type of business that can run fairly smoothly with don't want to say anyone at the helm, but I think there's a wide range of people that could manage that. But I think it's a business that, even with the previous CEO that's just stepped down, that's had a lot of growing pains before. Like, the last couple of years, they've been trying to expand into the US a lot, and they've spent a lot of money building out warehouses and logistics networks and so on. And, I just mentioned the stock was down 60% before. I'm looking through like a long-term stock chart here, and I think in the last 10 years, it's had at least 3 like 60 to 70% drawdowns just because they've had so much volatility in how the business is performing. So I think management's definitely important, particularly when they're growing really fast. Maybe once the business is more mature, that equation changes a little bit. But yeah, I think it's a big factor.
Well, speaking of maturity, After Dinner Investor brings up a good point. If you're looking for an X bagger, however many baggers you're trying to get here, they're at about a $3.8 billion US market cap. I think he meant to say 38 billion if you're to 10x that, or whatever you're trying to get to.
Yeah, we don't want to go that way, Jason.
yeah. We don't want to divide by 10 here.
It's 100 times backwards, right?
Yeah, right.
Yeah,
yeah.
It's already. Yeah.
Not even. That's a divide by 100 bagger. What's the end game here? Like, how much can this company grow? Like, fast fashion is that. Fashion in general is a very large market, but what kind of sliver can they take when you have behemoths out there already that have massive market share and are going to be hard to compete against? Like, how much can ASOS really take on the global scale? Like, that's hard enough to get to the global scale. They seem to have a good presence in the UK, but it's very difficult to move into bigger markets as well because of logistics issues and a host of other things. So kind of that's what I was trying to figure out, just kind of at the macro level, like, how big could this company really get if it just sticks to fashion and doesn't get crazy with diversification and blowing up that way?
So
they were
management
shop recently, right? I think in an effort to diversify. I think they're going more into physical spaces also.
Yeah, management have their TAM quoted as, or the total addressable market, at 430 billion. So that puts them slightly under 1% at the moment. So I guess to answer Jason's question, if that TAM didn't grow, they would need 10% of market share. I think that would be difficult to achieve, but that will probably grow by the time the business grows that much. So let's say they probably need about 5% of that total addressable market, however far out into the future you're looking. So it is achievable to grow 10x, I think, but whether or not they can do it's a different story.
Frank, does it say what geographies that TAM includes? I'm trying to find it now.
I'm just looking at it from the investor presentation.
Yeah,
and
it doesn't break it down really, does it?
No, so it actually says 430 billion by 2030. So it's actually smaller than that right now.
Oh, I see.
Which I didn't actually read until just now. So whatever the size is now, by the time 2030, I guess, is when you'd want to see this to be a much larger company. So they'd need almost 10% of 2030's total addressable market. So I think that's a pretty big ask. But I guess it depends how fast you would want that 10 bagger.
Is anyone in ASOS at the moment? No one.
Our boy Hamish.
Hamish, yeah.
Yeah. Of course, there are people in it, but of the punch card crew, Matt was asking because of Karan's in. He's in.
And I think Hamish just kind of dipped his toe in, from my understanding.
About a 3% position, I think.
Okay.
But that's kind of thrown off by, he has a lot of cash right now because he's saving up for a house, I believe. So of his stock portfolio, it's probably a larger allocation, but not exactly a super investor that we like to look at, is it?
Hey, he's probably watching right now, so we better be very nice to Hamish.
Easy there. We have enough.
Like Hamish.
We have enough beef in this room, so let's.
I'm not trying to start beef.
Is anyone close? Like, is the management issue? Is that the key issue? Is there something else that we're looking for?
If they get into the cloud business, if they become like Amazon, that'll be interesting.
they snap at the fingers.
Barring that,
yeah. In all seriousness, that's a good thought. Like we we know of Nick Sleep as the guy that bought Amazon in the early 2000s and held it till it was 70% of his net worth or something. And, obviously Amazon's e-commerce business is a monster, but a lot of that return came from the cloud business as well. And I don't think that sort of, I guess, like Bryce Borner DNA kind of exists in Asos. I mean, they are going off into, I think, like skincare products and that sort of thing outside of clothing. But that's one that I've been thinking through a bit lately. That I don't know that they really have that that kind of free lottery ticket like Amazon might have had.
Well, it's clear that they're more kind of in acquisition mode versus kind of spinning out new ventures. So it's a different approach from Amazon.
With the recent acquisition, I'm curious to hear your thoughts on it, because I know probably Tom and maybe Brad have looked into it more than I have. I've really only done surface level research. This recent acquisition of Topman or Topshop or whatever it is, there's a few brands that they acquired. I was looking through the announcement they put out of how much they paid. And just one interesting thing that management put in there was that they paid with their existing cash pile. But earlier in that year, they raised a lot of debt and diluted shares, which potentially funded this acquisition. So I just thought that was kind of probably not a great move to management to say they're paying with existing cash after
A little
diluting
sneaky, huh?
Yeah, diluting by 17%, so a lot of dilution during 2021 or the last 12 months. And they took on a significant amount of debt, and they had no long-term debt prior to that. So they kind of bragged about still having a net cash position after doing this. But I think that needs to be weighed in, particularly that dilution, because that really took away all of the per share growth over the past 12 months.
Right. Yeah.
Was that primarily a defensive move? Do you know? Like, did they pull out the debt and raise cash out of fear, like at the beginning of the pandemic, like they weren't sure what was coming, or was it specifically for acquisitions? I'd imagine it's the former, that it was more defensive. And then
you could give them the benefit of the doubt and say that maybe they're being defensive, but they're probably a COVID beneficiary. So I don't know if that's the case.
Well, that's what they ended up being, but I'm wondering if they
super chat.
Yeah. We got a super chat. I was just gonna say, like, is it a they ended up being a beneficiary, but at the time they took out the debt, I bet it was probably more defensive. It seems weird that you'd want to dilute that much that quickly, unless you were kind of scared or you had a very specific plan.
Well, and the way they framed the Topshop acquisition is that they were just able to get it for pennies on the dollar, right? So I haven't looked at that particular acquisition, but it'd be interesting to try to parse all that out. What do we got for the super chat here?
We have nothing.
Is he just donating money to the cause again? Pravesh.
Got a follow up. Thank you.
He's got it.
Awesome. Here we go. Yeah. Thank you.
Thanks,
you.
Appreciate it.
Awesome.
Tip of the cap. Appreciate the support.
Mm-hmm.
That's $1 each, guys.
We're on our way to our. We're on our way to our tax efficient studio.
A US dollar.
We're going to build out the punch card studio in the Cayman Islands at some point, or some
next to the Alibaba headquarters.
Yeah. Which is the same headquarters. There's probably like 1,000 other companies that use the same building.
Between JD and Alibaba, that's where it is.
Yeah, some PO
got
box.
One guy sitting in there, just not doing much.
The clerk for like 1,000 companies. They'll share. So we're gonna have a studio in probably that same corporate building somewhere in the Caymans, and that'll be where we film our punch card episodes at some point. And it's because of your super chats, the ad revenue, the massive amounts of money that this live stream will inevitably pull in that will go towards that.
Towards the SPAC.
Yeah, and we're gonna do a SPAC as well, and we'll have a huge promote.
SPAC, a social media company.
Go up against Trump's SPAC.
Yeah, let's not go
there. We're gonna get demonetized.
We're gonna put that in our title now. That's good clickbait right there.
Yeah. Just
Jack can do your Trump impression.
Oh God.
It's the perfect time, Jack.
Hold on. What is the what's the SPAC again?
The PCI ADR. How good's that?
No idea.
Truth Social is the social media company part of it at least. I don't know what the SPAC's called.
Social. What's the stock?
Just see what Jeremy's put up recently. Whatever's new, he's up.
I forget the DWAC. It's like Digital World or something. Yeah, Digital
DWAC.
World. They are up 100% today, and that is they're up 846% in the last 5 days. So
It sounds like a Quran stock.
yeah,
I was happy about Alibaba like going up a little bit, in the last 5 days.
it's been a tremendous run up.
There you go. Now we're talking.
Wow, what?
So guys, what's the moat for Asos? Anyone have thoughts on that? That's one I'm struggling with personally.
Moat.
I can't see it currently. We did talk about this slightly before stream. I think they're trying to develop a moat by being having the best service for their customers, faster delivery. They're building out their, I guess, logistics and warehouses and everything else. Having that quick delivery, easy returns, all of those things. They currently, I can't see that being an advantage right now. I think, as far as I can tell, any of their other competitors like Boohoo, even if you're ordering something off Amazon, which I guess some people would do for fashion as well, I don't see a competitive advantage right now. But again, I'm still only service level on this one, so there might be something I'm missing.
I think that it's not really a moat, but it's akin to Amazon's Prime model, at least in the UK. I know they have their like £10 per year, which is like, that's clearly a loss leader. So I wouldn't really call that a moat, but that sort of pricing power, I guess, is what it would be that they've been able to sustain. Could kind of shun out a good number of competitors who can't afford to basically take a loss on acquiring customers. I'd hesitate to call that like a really strong moat, but it's something. And I was trying to think like, what's Amazon's retail moat? We know their moat in other businesses like web services, and others is like data and massive amounts of computing power, essentially, for that. But for like the e-commerce side, it seems like it's kind of customer stickiness, great customer service, fast shipping, and then like a pretty cheap price via something like Prime. In this case, you have like the ASOS equivalent of Prime. So there's something there. I wouldn't get overly excited about it, at least yet, but it seems to be a step in the right direction, at least towards building a solid, sustainable brand.
Well, I could see obsession with customer experience being a kind of moat, right? It sounds like from what I've read about Asus, with the supply chain issues, with the increased shipping costs that they experienced recently, they refused to raise prices for their customers, and most companies wouldn't have hesitated to do that. So there's a long-term orientation. I think that's something Nick Sleep probably sees as well, that isn't all that common. So that could be something.
It's a double-edged sword. In the short term, it hurts because it's expensive. But if you can afford it and really build that brand, it's super powerful long term. It's just the question is getting through the rough times, obviously.
Yeah, but I mean, there's an extent, I think, to...
Sorry, I was just going to say, I think the way that Jeff Bezos would look at a decision like that is, how does this impact the present value of future cash flows? And then it becomes a much easier decision. If, eating those costs in the short term create greater cash flows down the road. Sorry, Karan, go ahead.
Yeah, but they haven't been reinvesting it into any sort of different avenue, right? I feel like it's weird, but you could almost compare ASOS to the airlines, where you keep giving the benefits to the customers and eventually over the long term, there's no benefits to the shareholders. Like, I'm sure they'll do great things for their customers, but eventually, the shareholders will kind of stay relatively flat if they keep just giving the benefits off.
I think, to push back on that, I think what they're trying to do is do one thing really well. So I guess long term, if they can have these customers kind of recurring over the long term, which I find is going to be a hard thing to achieve, but if they can do that, it will be a competitive advantage long term if they really can keep their customers happy, which eventually feeds back to the shareholders over the long term. But I can't see that definitely happening, but I guess that's what they're aiming for.
I think, Karan, what you're getting at is that is this a race to the bottom sort of deal? Is that where you're getting at?
Kind of.
How
I
much?
actually went around and asked a few people who use ASOS, like in the UAE, and I asked them, what do you think about the products? And they're like, the products that the ASOS brand has, they are definitely lower priced and for the quality that they offer. But if a competitor was offering something even remotely similar for like even a 5% reduced price, they'll probably be okay switching. So I don't see that customer retention being as much of a factor, at least not here.
Yeah, I wonder if in the UK the return benefits and the ease of sending product back if you don't like it is an advantage they have.
It's got to play a role, I'd imagine. But maybe in other countries like the UAE or elsewhere, maybe they don't have that infrastructure set up, or they're not willing to do it. I could definitely see just you're not going to have sticky customers because it's only coming down to price, like you're saying.
Can anyone
Yeah.
explain how their subscription thing works? Like it's something to do with paying $10 and then having delivery free for the whole year. Is that right?
I think they describe it on their site, but let me.
Yeah, it's like next day delivery for most locations with
It's like
that
85%,
10
right?
pounds a year. Yeah, maybe 85% coverage.
I'd want to
So I
know.
guess
Does anyone know like a per customer like loss number on that? Because there's no way that's like net profitable.
I've seen very little. They haven't really broken down
I'd be
the
curious.
economics of that delivery, premier delivery service that I've seen.
I'd also be curious to know if competitors are doing that, because I could see that as a competitive advantage because it would keep customers, like if you're paying that subscription,
Right.
you'd be a lot more likely to come back that year and spend more and more until
Yeah.
the company does see value from having that kind of upfront expense.
Kind of like a Costco or a Prime with Amazon, where you have that fixed membership fee that gives you this incentive, no matter how unreasonable. Like the $10 is sunk at that point, but people feel like they got to get their value or whatever.
So I don't know the numbers on it, but assuming other competitors aren't doing that and they're seeing growth with that service, I would see that as a competitive advantage, but I don't know how well it's doing so.
Yeah. The other way I've sort of tried to think through this question is like, what's the competitive advantage of something like Costco? Like, there's a bunch of places all over the States and various parts of the world that sell food, but for some reason Costco attracts a lot of customers, and they clearly have this like scale economies shared model that Nick Sleep talks about all the time, where the larger they can grow their store count and the more efficient they become, the more they can give back some of those scale benefits to customers and to employees. Like, I think the number at Costco is they'll never mark up a product more than 15%. I don't know if you guys know
14 or
what that number is.
15, yeah.
Yeah, but I think it's around there. I don't know if you've got the numbers on ticker there, Jack, or someone else, but I think the gross profits for ASOS are in the 40% range, 40 to 50%.
Yeah.
So
Yep.
they're clearly not moving just the massive volumes that Costco are to like drive that gross profit down to the floor. But I think that is probably, I mean, as I understand how Nick Sleep kind of thinks about these things, I'd imagine that's how he views it. Like, the more ASOS can scale, the more they can drive those gross profits that they can kind of accept down, like give those benefits back to the customer. And that's a competitive advantage that kind of just scales over time. It's like a snowball that you can't stop from rolling down the hill sort of thing.
Becomes
Like,
harder and harder to compete with, yeah.
Yeah, it becomes harder and harder to compete. But the question I can't answer is like, there's a bunch of people in this race to grow as fast as possible and build that scale. And I don't quite know who's going to win. It's not that obvious to me.
Sandeep asks about, does ASOS have a private label like Amazon Basics or Kirkland? And I know they source a lot of their own stuff and they're acquiring more brands. So I would answer yes to that they do source their own brands or private label them or whatever you want to call it. In this case, which would give them some scalability for sure.
Yeah, they have ASOS branded products, and they've got certain products that they've done like influencer marketing on, which has been quite successful by all accounts. So yeah, they've gone down that track as well. But they also resell a lot of products. Like, I was trying to do an analysis across the various e-commerce platforms on how much it costs to buy a pair of Nike trainers, for example, and they sell those types of products as well. And interestingly, like I was seeing, I think the shoes I was looking at were like 85 Great British pounds, and across 3 or 4 different sites the price is like within 5 or 10 pence of each other. Like, there's no difference at all between these sites. So that surprised me a bit, actually. I thought they may have some advantage in those areas, but perhaps it's not with those real mainstream brands. Maybe it is with their own clothing.
I know. So part of their kind of strategic plan over these next 3 or 4 years to get to $7 billion in revenue, they also want to increase their own brand sales by $1 billion. So I guess that gives you a bit of a guideline for how much is own brand sales.
I think it would be interesting to compare this to early Amazon. So when Amazon was around, say, 2 billion, when they were mainly focused on books and those sort of products before the cloud business and everything. I think one of the things that Bezos mentioned was that the reason they chose books was that it was like relatively a standard size and you could have a huge collection and there wouldn't be too much discrepancy in shipping.
Yeah.
With clothing, there's so many different sizes, colors, variety. It's almost like a mess. Like someone doesn't like it, they'll just return it. And that continuously impacts, obviously, sales numbers and everything.
That's a good point. I would hesitate on comparing it directly to early Amazon because it was just such a different environment with e-commerce in general. E-commerce as an industry, so you'd have to discount it like that. But I think the general premise you're getting at is that that's a good point. Where this is more complicated, even though it doesn't seem like it, it's just clothes. But you're right; it's so many different items across so many different varieties, and that's just go ahead.
Sorry, yeah, I used to sell shoes when I was 16 to make some money. And eventually I stopped doing that because of all the sizes. People would like take a look, you bring like the inventory is huge. So you have to bring like 5 different sizes for a person to pick maybe one. Whereas with a book or something, the sale is more, concrete. Like, what you're selling, done. The person knows what they're buying.
Yeah.
That's a bit from my experience also. So, yeah.
And how many people return a book after reading it? I've never thought to. Is that a common practice for Amazon? People return the book out of disgust, get a refund.
I saw
books
someone
to CDs or something, right? After Amazon.
What's that?
I don't know.
Amazon went from, I think, books to CDs. Like they went for things that people would not return because obviously the return costs are quite high. So.
I did see someone on Twitter once. They ordered a copy of Poor Charlie's Almanac, and it came all the writing, like the pages were upside down. So you opened the cover, like you opened it up the right way up, and all the pages were backwards and upside down.
Wow,
not ideal. Like the most expensive book you'll probably ever buy.
I feel like you could auction that off for like the special upside down edition or something.
Oh, everything's inverted.
Yeah, the book itself
is always invert.
There you go. Yeah, I really get the feeling like I'm missing something on this. I don't know if you guys feel the same. Like Asos has been a 100-bagger since 2000. They must be doing something right here.
I don't think it's a bad business by any means, and there's kind of this overarching issue with supply chains that's concerning, but you'd imagine that's at least somewhat short term. There's the kind of fallout or ongoing problems with Brexit and being a UK focused company. That's obviously a concern, but these seem more like shorter to medium term events. And if they weather those, which it seems like they're doing okay, long term, you'd expect the business to do decent. Now, is the price fair? That's a totally different question. And it's been coming down pretty fast over the past few months and past few years, really. And now you have this new wrinkle with the management situation. So it seems like there's a few significant short-term events that if they can weather those, I think they could be in a much stronger position a few years from now. So if you're willing to take the risk, that's what I think the main thesis would be. It's not really like a short-term sort of thing. It's all right. If they weather these things in the next couple of years, they should be in a better position 5 to 10 years, one would think, and be in a much better position and much bigger. That seems like the bullish thesis mainly. That's how I'm understanding it.
Yeah. Would you guys want to talk valuation? Have any of you done some work on that with the price coming down? I mean, they've put out some guidance. I think, Frank, you mentioned it before, around sort of 3 to 4 years out, how much they want to grow revenue and put out some target EBIT margins, and that I think it was. And the growth looks impressive. I think depending on whether it takes 3 years or 4 years, it's like high teens to mid 20% a year revenue growth from memory.
In
You
good
guys looked at
years.
that much?
In good
So
years.
I
Well,
just did some of
that's
the
what
numbers.
they've put out projections for the next 3 or 4 years.
I just did some of the numbers before we jumped on stream. So I used the 4 year. They say in the projections 3 to 4 years. So I took the 4 years to be more conservative. So to go from 3.9 revenue now to 7 billion, that would be 15% compounded revenue. EBIT, if they keep that 4% margin, their EBIT would go from 192 million to 280, which is only just under 10% compound annual growth rate for EBIT.
280?
Yeah, 280.
To 280 million, that's what they end up
Yeah.
with, so which is, so about 10% annual growth. Free cash flow, they've said they're going to spend 200 to 250 of CapEx each year, which is a lot more than they're spending right now. If you use their kind of median 10-year free cash flow margin, that would be about 10% to 15% growth annually, but they're going to spend more CapEx, so it's going to be possibly negative free cash flow, if not a very low margin. So, and all of that is not per share. They usually dilute shares slightly as well. So really, free cash flow per share could be less than 5%. But whether or not that leads to higher returns in the following 5 years is a different story. Their operating income's going to compound at around 8% per share if they reach that target, and revenue per share is about 13%. Then if you flip it back to 3 years, though, I haven't run those numbers, but that's when it would look a lot more appealing. If they reach all those targets within 3 years, all that growth looks a lot better.
That seems like a tall order, though, given what's going on right now, to do it that quickly. And that seems to be the challenge that investors are trying to wrap their head around.
I'll just quickly check. So revenue growth would be 21%. EBIT would be 13%, and free cash flow would be 9% roughly if they did it in 3 years instead. So still nothing exceptional. You would have to also hope for a little bit of a multiple re-rate to really get your returns to where you'd want to see them. And historically, it's traded a lot higher multiples than it is right now, so you might get a multiple re-rate. But I wouldn't rely on that yet.
Yeah, it's a tough one for me valuation wise, because there's still like so much in growth mode, and I get the feeling a lot of that capital expenditure is like I guess like growth capex. There's not a lot of maintenance in there, I wouldn't think. So I wonder if that falls way off eventually, and then cash flows do look really good. But super chat, is that a world record super chat, guys?
I think so.
Big spender.
I don't know if we've ever gotten a question on a super chat, which I find kind of funny.
Can we squeeze a question out of this somehow?
KK or Pravesh, please let us know if you have a question. You got first dibs. But thank you, KK.
Thank you, KK.
Thank you.
Another step closer towards our Cayman Island studio. Tax-free live streams coming up. Or we could do the UAE with Quran. That would probably make a little more sense logistically. But a Caribbean island sounds kind of cool.
I wouldn't have to wake up at 6:30, which would be great.
Yeah. You could do it at noon your time or something.
Yeah.
You were saying, Tom.
What was I saying? Something about something about capital expenditure.
Yeah, the capex dropping off theoretically once they kind of
growth capex.
mature.
Yeah, I mean, as I understand it, they're building out a bunch of like warehousing facilities and that sort of thing. So clearly, that's going to be quite expensive in the short term. But you'd think those are pretty durable assets once they're established. So yeah, I just kind of struggle to see what kind of cash an Asos throws off once it's spent all that money and built out all the infrastructure it needs to. It's a challenging question for me to answer.
I think the hardest
I don't know
question.
if you guys have thoughts on that.
The real question, I think, I'd expect that expenditure to drop off at some point. But the question is, do other expenses rise? And because of their focus on the customer, their margins will constrict. And by how much do they constrict? Is this really a race to the bottom, as Kron was suggesting might be the case? that would be kind of your, I think that's the biggest risk here. It's just margins in general compressing in an already pretty low margin sort of business, clothes, fashion, fast fashion, not even high fashion. That would be pretty concerning, especially as they enter multiple markets, got different tax issues, logistical issues, which have proven to be a nightmare over this past year and a half. Do those really get much better? That seems to be the big risk, at least in my view.
Well, I think that's what they're trying to do, though, isn't it? They're trying to get so much scale and operate with relatively thin margins so that no one can ever compete with them. Like,
yeah,
that's the Costco model.
But that is incredibly hard to do, obviously, and while you're trying to grow at the same time. If you're just trying to maintain, then yeah, sure, you could take a margin hit and watch as no one can touch you, kind of like Costco's at right now. But it's a lot harder to grow while doing that at the same time. It's like cutting prices from a place of power versus trying to like go into a place of power with kind of no dry powder to cut. If I'm explaining that well.
Costco is win-win.
Well, I think-
This seems like win-lose. Like the customer wins, but the company loses. That's a
I
big
don't know if
risk.
it's I don't know if it's that
How's
extreme.
that different to early Costco? Isn't
I
it the
think-
same thing?
A lot
I
less
think
They can get to
competition
the
for
destination.
early Costco. Here, like competitors will eat Asos alive if they don't at some point improve their margins.
I don't think they necessarily need to improve their margins. I think they just need to maintain them. The
Yeah,
concern would be having such a low margin business, any fluctuation down towards 3% EBIT, 2% EBIT, that hurts the business so much. Of course, that's just a given with any low margin business.
Right.
As long as they can maintain that 4% EBIT over the long term, I think they do fine if they continue to scale. I think it's exactly what kind of Costco models was. My concern would be around the capital allocators. I don't know anything about them. Maybe in the past we had some good capital allocators have had some high returns on invested capital. It's whether or not this management team can maintain that after this kind of extra spend into growth capex. So I would think that 5 to 10 years out, this looks like a great business. I'd just be personally hesitant over the next 3 years of uncertain times to actually bet big on the long term, I guess.
What I don't know if you guys have different attitudes to me on this, but I'd buy almost anything at a price. Do you guys have a price in mind for where you would feel comfortable making that bet?
I'd probably have to do more work because I don't know what a fair multiple is from my current understanding. And the growth moving forward, if management are right, isn't anything overly impressive. It's about, like I said, maybe best case scenario, 20% top line growth and 10 to 15% bottom line growth. That's best case. Worst case, it's a lot worse than that. So I think a lot of the return would need to come from a multiple re-rate to be an exceptional bet over the next 5 years. But yeah, it's hard to make any serious guess at that right now.
I think it depends on your like discount rate. I did some very basic kind of like free cash flow sort of valuation using like a 15% discount rate and assuming like a 10% growth rate over the next 5 years, which is pretty I don't know if that's aggressive, but especially over the next 1 or 2 years, I think that's pretty aggressive. But if they hit that, it seems like it's kind of around a fair value. So I would want a margin there, though, a margin of safety. That's not really providing me one. So I think it would have to drop quite a bit for me to get really interested at this point, with the problems that we see with management and also with the problems we see with logistics that are giving it headaches.
Yeah, I'm sort of landing again. These are early in the research kind of numbers, but I'm landing like 30 to 50 pounds per share, depending on what sort of growth rates I use as an intrinsic value. But yeah, it's tough to be confident in that.
It's not a no-brainer. It's
No, not at this price.
Yeah.
No.
But it may have been when it got to what, 10 or something, and for a short 12,
Did it get to 10?
maybe?
Is that right?
It got close.
For a very short time,
Last
March
year.
2020, it got to 10 or 12.
yeah, but even then there were so many other options that
Yeah,
were
everything got to 10
way better.
or the equivalent.
I think that's always the case with ASOS. Like you're always going to find something that's probably a little more compelling. Yeah, it's a little easier to understand.
Yeah. easier to understand for sure. I mean, I think the forward returns could be good. Like I say, it's been 100 bagger, and I think it's still got a lot of growing left to do.
For the 100 bagger,
But it's hard to be confident in.
Yeah, for the 100 bagger, it kind of reminded me of something from Poor Charlie's Almanac, which was the concept of surfing. So I feel like the trend, they kind of rode out the trend of e-commerce, and they've been great so far. But I don't know if they'd be able to sustain that same, surfing momentum moving forward. I'm skeptical about that.
So you think they were more
That's fair.
lucky than good, Karan?
I'm saying the rising tide lifts all boats.
Yeah.
Same thing with the e-commerce sector. Yeah. I mean, they were good, no doubt, but you don't know if they'll
don't
be
get
good.
carried away is what you're really saying. Yeah, I think that's totally fair.
Yeah, and it's like, I'm just looking at the market cap. Presumably this is Great British pounds, but they're just under 3 billion market cap. And you're trying to compete with Amazon at, I don't know what that's at now, somewhere in
Yeah.
the trillions though. It's small fish, big pond, I suppose.
It's a rounding error for Amazon.
Well, you kind of gotta segment off like the fashion portion of Amazon. It's you can't get too carried away because Amazon does so much. They're definitely a competitor, no doubt, but being mainly fashion, that it's a little bit more niche, but same general kind of model, I guess, on the e-commerce side. Because I guess you could only make that model so unique, I guess, shipping things to people. Should we get into some questions?
Yeah, I want to hit one of the questions.
do
Karthik,
it.
one of our regulars here. Next question, a punch card. How to find out when Nick Sleep sells?
I have another one from Karthik.
Oh, he's
actually,
got
that was
another
earlier.
one.
I like this one.
We have a question from KK Investing.
We'll get to him right after Karthik because I already have it on the screen. Doesn't the story or thesis change when management changes? Is management changing a fundamental change? A management change to me will impact on revenue, expenses, margin, free cash flow, reinvesting capability. I think it very much depends on the business, how much of a fundamental change management is. That's kind of, I think that's, correct me if I'm wrong, but I think that's kind of what we're seeing with this one, is whether it really is a fundamental change, being newer to this business. How important is the founder right now, or is the leader of this company? Maybe it's more important than some people make it out to be. Maybe it's less important. I think that's the unanswered question here. So I guess my answer to Karthik's question is it totally depends on the business, on how fundamental a management change is.
What Jack said.
Yep.
Great.
Like Seritage, we didn't care what the CEO. With Seritage, the
We
CEO
didn't.
left. The entire, I think, top management changed within the course of 1 year. So we didn't change anything. Yeah, it depends on the business.
Well, some of us did.
Yeah.
I'd be curious about Nick Sleep's thoughts if he had never bought in, whether he would buy in now. I know he's a big fan of like owner-operator businesses, which Asos was. Now that it's not, I don't think it's a typical type of management he would like to invest in. Maybe he just likes the business so much that it wouldn't matter. But I would be curious to know his thoughts on this new management team anyway.
You guys buy Asos if the new CEO was Nick Sleep?
I'd have to. It'd just be too tempting.
It'd be great content. It'd be amazing content for that alone. Should
I
we
don't
get
know
to
that would end well, but yeah.
So
Let's
we
say
get
that's
to,
the super chat if there is
yeah,
one.
KK had with his follow-up question
There it is.
after the generous super chat. I'm assuming KK is male. I'm not too sure. If you had to put all your net worth into a business, not this question again. Which would it be?
We did a whole stream on this, didn't we?
This one has less parameters. So our parameters were very strict. It had to be like small cap. Can't be one that we already hold. all those things. Can't be a fund.
Do we get to decide the buy price?
Well,
I think current buy price is current market price.
you
$1.
got at least around current. Who wants to go first on that one? We'll just say like, how about no funds, like trying to stick to a business, but no market cap limitations.
I'd go with Reliance in India. Yeah.
That's bold.
I'd probably go, if I was feeling risky, I'd go Kelly Partners Group, which is most of my portfolio right now. But probably if I had to just keep it there, couldn't touch it, I'd go Berkshire Hathaway or something like that.
I kind of count that as a fund, but I see what you're doing.
Yeah. Yeah, my answer would be Berkshire or Markel as well.
I think they're kind of safe places that even if your return's low, at least there's not a big chance of a loss on those ones.
Or even like even at current prices, like an Apple, just like some massive moat. It depends on how defensive you want to be, kind of like what you're saying, Frank. It's like if you're trying to grow as much, Apple's probably not the place to be compared to something like a smaller cap, just because it's already so humongous. But they have so much cash, amazing brand, great moat. So you'd think your money's going to be at least safe, even if it doesn't grow at a huge clip, even if it shrinks a little bit. Like it's probably not going to go away anytime soon, one would think. Not financial advice by any means. Who knows what will happen to Apple tomorrow? But that would be my thinking.
Everyone.
Yeah, right. Yeah.
No, don't do that.
I just opened up a short on Apple after what I said.
Yeah. That question from Sabi, that if that's how you say that name, Sabi Khan, that just came in.
Brad can't get away with that one. I want to know what Brad gets.
Yeah.
Oh, no, I thought we were
Oh,
moving
sorry.
on, guys. This was great.
Now, what do you got, Brad? Racist logistics or
Well,
what?
Tom, if you get to pick Berkshire, I'm going to pick Berkshire as well.
Yeah, I'd probably default to that if we're doing fund. I think Karan was the only one who followed the rules.
Reliance is like the Berkshire of India. So
Okay.
There you go.
All right, fine. Nice diversified business, lots of cash, good management.
Yep.
What else could you ask
Cheap.
for if you had to put it all in one, I guess? Thank you, KK.
I don't understand Sabi's question. I own 30.
Yeah.
Is that-
So this is a reference to the Shameless Cloner portfolio video I did the other day. With some of the positions, I rounded up to get even numbers of shares in the portfolio, and I said I'm doing this because I'm not a psychopath. I know it's irrational, but like I want the share count to end in a 0. And I'm actually embarrassed to say that my Barber holding actually ends with a 9 of shares. That's just how the price worked out, and it really like irks me a little bit. I'll probably fix that one day. But
Just throw.
but I'm in a similar position.
throw
Guy
in
does
another-
that, right? He needs like round numbers. Even
I think
that's
all of my
a big guy
holdings
spear thing.
are multiples of 5. They all either a 0 or a 5. I think for every position. Yeah, check.
You're like that. You're like that person when someone puts the car radio to 11, you have to turn it down. Is that?
Yeah, exactly right. Yeah.
I don't know if that gets you further away from being a psychopath or makes you more like a psychopath, guys.
We've all got OCD or something.
Well, I currently have 529.61981 shares of equity
I
common.
know.
Ooh, I like it.
I hate
Can't
that.
do that.
Turtle Beach, I have 299.08594 shares.
Yeah.
$2.99, Jack. That would keep me up at night.
Yeah, fractional shares, man. Woo.
Let's all chip in and get Jack one more share of Turtle Beach.
Yeah.
Yeah,
I
next
have an
check
order
goes to
queued up.
Jack's Turtle Beach Fund.
I have an order queued up for Monday, so we'll see if there's any action in the morning. We'll see what happens.
Okay, what else we got in the questions here? Karan, you getting a lot of love.
from Australia.
Afternoon investor's choice of fund or business would be
100%
Karan
baby.
Zitoro.
There
Which
you
you
go.
can,
It's
if
too
you're not in,
diversified.
if you're not in the US, you can copy Karan's trades on eToro. We'll see if that is ever actually brought to the US. I think they're trying, like we've been saying. That would be pretty interesting if they allow that in. Copy trading.
I'm invested in 8 companies now, and I feel way too diversified. Yeah.
What are the
Don't know
8? You
how you
have
can
it's
keep up with them.
what? So it's Equity Commonwealth, Pershing,
Hurts.
Seritage,
I think he's got a little Twitter.
yeah, Twitter.
Twitter, yeah. Discovery. What else?
Oh, maybe some Process.
Oh, yeah, Process.
I know your portfolio better than you do, Karan.
Yeah, it seems.
Yeah, I haven't
'cause
checked
there's
it
too
in
many,
a
you
while.
can't
That's why I've
keep
been
up.
doing better. Yeah. Yeah, so it's Pershing, Alibaba, Equity Commonwealth, Process, Twitter, Seritage, IWG, and Discovery.
Awesome.
Nice.
Nice and tidy.
Yeah.
How many positions are you? Is everyone out now?
I have 8.
Okay. Same.
I think 5.
I think 5 as well.
Let me check real quick.
Very
I used-
concentrated out here at Punch Card until we hear Jack's number.
Yeah, see, I used
Oh
to be.
boy.
I used to be in the like. I know.
$9,400.
I used to be in the hundreds. Now I am down in my taxable accounts. I'm down to 38. So but I used to be in the hundreds, like around 200. So that's big concentration,
Nice.
real quick. But I mean, like,
Dang.
here I actually have it right over here. Here are my kind of main holdings. Let me zoom out a bit. Here's my general concentration in my taxable account. If you don't count my real estate, which is really where the real concentration is, but in my stocks, Pershing Square makes up
Wow.
almost
It
20%.
looks like Newton's pinwheel, the whole colors.
Yeah, Google does that automatically. But as you can see, like 3/4 of the portfolio is 1, 2, 3, 4, 5, 6, 7, 8 holdings. So, and this is all like slowly being compressed into these larger holdings. It's been a process because taxable events. So,
Low return on brain damage, Jack.
oh yeah,
That many
a lot of these were
positions.
fire and forget sort of things, kind of like the back in my efficient market hypothesis days, so that sort of thing. So I didn't really put much thought into buying them in the first place, which is why I bought them. And I've been slowly selling them off when the time is right. I try to sell any that have lost combined with ones that have gained to negate taxes when applicable. And then only when I feel like I need the cash to go throw it towards something else. So, but that will continue to keep going down, I would think, until I'm probably below like 30 holdings.
I
So-
just shared mine for comparison, Jack.
Oh, sure. Nice
this-
and tidy. So I'm on my way. I'm on my way.
Sharesite.com/investing with Frank.
Yeah, scratch that and /investing.
Oh, okay.
la.
Let's move
Oh.
on. Let's move on, fellas.
We should get a punch card link.
Yeah.
We could
so
share.
A bigger
I
discount.
want to hit a question
You're
from Matt. Does the UK offer the equivalent to proxy statements so we can review ASOS's incentive structure? So probably, what I do when a company isn't US based, I would search ASOS Investor Relations, and they're going to have all that information on their investor relations page, whether it's in the annual report or whether it's kind of deeper. It'll be there somewhere, but I haven't looked at the incentive structure for management at ASOS. But important stuff.
Yeah,
There
if
is some
was one
stock-based
thing I'd
compensation
focus
going on.
like-
Sorry, you go, Tom.
Yeah, that's interesting to know because I was listening to a conference call of ASOS yesterday, and they were talking about these medium-term targets of the next 3 or 4 years are well aligned with management incentives and so on. But like Frank, I think you mentioned before, nothing is really ever reported in like per share terms. So I'd wonder if those incentives are like in total revenue or earnings per share or anything like that. It'd be nice to see some per share stuff mixed in there with one of these, I think.
Next question.
I just got it for my own benefit. Peter Lynch ran a large portfolio of like many hundreds of stocks at some point. So, I take after Peter Lynch. That's it.
Yeah, that's what it is.
If only we were all as good as Peter Lynch. Yeah.
Yeah, actually, though.
So Peter Lynch, was he trying to understand each business, or what was his thing? I imagine he was.
Yeah, for sure.
Yeah.
That guy, from all accounts, lived either in the office studying businesses or on the road looking at businesses.
Yeah.
He wasn't like a I want this allocation to this sector type person, as far as I know. He was.
I wonder if
looking at
that's
the
why
companies.
I wonder if that's part of the reason why he didn't go on, for 50 years or something, just because it was so
I
active
think so.
in that way.
Yeah, I think that played a big role, personally.
That'd be exhausting. And he made so much money. It's like, all right, enough's enough, and it's a lot of effort.
Yeah, quit while you're ahead.
Yeah, right. That too.
Not that he stopped investing.
No.
I'm blanking on the details, but I think there was an article that came out maybe a year, 2 years ago about either his or his wife's IRA, and that had compounded at some crazy rate, like after he'd retired from Fidelity as well. So,
His hobby.
yeah, he definitely didn't stop.
No. It would be hard to like. That's what it's. That's for all these like. Once you get like so much money, it seems like a lot of very, very rich people who actually build their own fortunes just continue to build them forever. Even when they're not even trying to, they'll move it into more passive investments. But because there's just so much money, it keeps compounding on itself. And at a certain point, when it becomes super wealthy, it becomes hard to spend it. Like there's just so much money coming in that like, what are you going to do with it? And if you got to this point by investing, that's probably what you like to do. So you're going to keep investing, and it just keeps snowballing. And the more years, the merrier.
That's a tough problem to have, guys.
Yeah, I know, right? It's a fantastic problem.
First world problem.
Have any of the punch card hosts ever owned a UK stock?
Not directly.
Does Pershing Square count?
It would seem like it does.
Even though
Pershing
it's,
Square is listed in Amsterdam. UK shares exist, but it's
I thought it
Amsterdam.
was so it's like initially listed in Amsterdam, but I thought they had like the what island?
So like
is it?
Naspers is listed in Johannesburg, but then they also have the listing in London, similar to that.
So it's like dual listed, right?
Exactly. Yeah.
But what's the other? Is it?
But
It's
it's
not
not
Jersey.
domiciled in the UK.
And it's all U.S. holdings too. So it's like it's really more like a U.S. fund. So I wouldn't really count it. It's just more of a listing kind of.
I thought Pershing was a Cayman Islands job, or did I imagine
Amsterdam.
that? Okay.
I wonder why they did that. And do you know?
Tax
Ron?
reasons.
But why wouldn't
Lower
you
taxes.
do? Well, why not like the Cayman Islands then? That's like pure low taxes. You know,
Bill loves to overcomplicate things. I
that
found.
is also that's true. That's true.
Can't disagree there.
I always wondered. I'm like, why this seems so weird? Given that, like, you just open up your ADR in the Cayman Islands and call it a day. Like, it just seems like everyone does. But nope.
It's the same reason Process is listed in Amsterdam. Liquidity, so on and so forth.
Dual listing in Amsterdam makes sense, but like having your main base for whatever tax reason.
Process's main base is in Amsterdam.
Oh, is it? Oh, yeah, it
It
is.
is, yeah.
No, yeah, you're right. You're right. Yeah.
So
I own a company in the UK. Yeah, IWG.
You do?
But
Which
then
one?
that's headquartered in Switzerland. International Workplace Group, IWG.
Okay. Yeah, I'm digging into Naked Wines, seeing that Norbert Liu added some recently, and Greg Alexander owns quite a bit, so it's looking pretty interesting. Elliot Turner of RGA Advisors did a pretty thorough talk at MOI earlier this year, January of 2021. So it's been good digging into that.
What's the elevator pitch, Brad? For Naked Wines?
It's
what do they
direct.
do?
It's direct vineyard to consumer wine sales. So, the idea is you can cut out a lot of costs because you don't have the middlemen. I guess it's illegal in the U.S. to do like online wine sales unless you're doing it direct from a vineyard or something. There's kind of a loophole,
Right.
and Naked Wines has that loophole. So it creates a moat in a sense. You mentioned, I think, Bill Brewster talked about that a little bit.
Yep.
And he tried the service and he didn't like the wine. So that was a pretty quick pass for him. But I guess they've gone more and more high end, and Bill likes the higher end stuff. So.
Yeah, okay. Yeah, Bill Brewster, I think, was actually in Naked Wines, and then he had, I forget the exact story, but I think he had someone over for dinner, and like, by the time he'd poured out like the fifth bottle of wine down the sink, he was like, "Yeah, I don't think I'm
time to sell, right? Yeah, time to sell.
Much longer." Yeah. So do they? I'm not sure how deep into it you've gone, but do they actually own the vineyards as well, or are they just doing the processing and winemaking?
They're connecting, I believe, consumer to the winemakers.
Right. So they don't do any winemaking themselves or anything.
Frank?
It's Taubau.
They're trying to benefit. Their theory is that all three parties are kind of benefiting from this. That The winemakers themselves are getting the best deal because they're selling direct to consumer. Consumers are getting a cheaper price because all the middlemen are cut out. And then, of course, that benefits Naked Wines as being that only part of the middleman. So that's kind of the competitive advantage they're trying to go by.
Well, and it's
So
a
it's just Taobao for
subscription.
wine.
It's a subscription-based model. So the customers put up the cash, and then the winemakers can know, okay, this is how many bottles we have pre-sold in a sense. So it's great for everyone. It's a win-win-win.
Cool.
Yeah. So that's what I'm digging into.
Shall we hit one more question?
Yeah, why not?
Before we wrap it up.
I'm good for time.
So people are mentioning Peter Lynch left for family, which, like what we were discussing, it's like when you're pouring all this time into investments, it's like, what's it all for? You could say the same about really any career, I guess. Got to have some sort of purpose.
Yeah, is 3,000 to 18 mil the Roth IRA numbers, or is that not right?
That's child's play compared to like Peter Thiel and some others. And was it Ted at
Ted Wishler.
Ted
yeah,
Wishler.
Ted, not Todd. Ted.
Not to be confused with the other one. Yep.
Yes.
What else have we got?
Guess-
Weekend plans. Are we going to do that again?
I got
Well,
I got lots of billables to hit because we got 2 transactions closing next week. So like these last few weeks have been pretty brutal. But there's light at the end of the tunnel, and I look forward to next weekend. Not so much this weekend. So not a lot planned. So I'm not exciting. You guys have anything? I hope you guys have something exciting. Brian, you're moving, right? Or is that still going on, or what's going on?
I'm home. Yeah, I'm back. I've moved. Yeah.
Fantastic.
New setup. I mean, new old setup.
And now you hate real estate agents, right?
Who likes? I mean,
Okay.
Ron, I'll have you know, I am a real estate agent too.
yeah, but you're a real estate agent when it's convenient to get that 5% back.
That's correct. The career agent.
What's everyone else up to?
I've got ticker time tomorrow, as usual, if anyone wants to join in.
Tune in.
Nice.
Love that. That's such a good series. Like, it's amazing idea. Fits right in. Love it.
Thank you very much.
Tom Red.
Yeah, birthday. So my wife's birthday was 2 days ago. So we're going to do a celebration tomorrow.
Well, happy birthday to Mrs. Stock Compounder.
Thank you. Yes, yes. She would love that. Not really. And
Sadly.
I feel like there's something else. Oh, we might start another cleanse this weekend on Sunday.
Oh dear.
I know. A 21 day. I don't know why I do this stuff, guys. It's terrible.
Yeah,
Is there
I
some-
thought I was a psychopath for buying uneven numbers of shares, but then you go and do these things to yourself.
Yeah, I'm gonna give you a run for your money, I think.
It's like a fool me twice to yourself.
Yeah.
Fool me once, like, all right. Now fool me twice by self-inflicted wounds.
Well,
I hope you feel better after this cleanse.
that's what I hope. Yeah.
Did you feel?
Yeah.
I forget if you said you felt better after the first
It was
one.
mixed.
Is this
I
a
wasn't
different
sure.
approach? You're
Yes,
taking?
different.
Okay.
Yep.
So maybe not fool me twice. It's a different approach.
Different.
I rescind that.
Thank you.
Tom, what do you got?
Jeez. Well, it's a long weekend here in New Zealand. I had hoped to go away. I had a few mates from university. We were going to go up north and go to the beach and go fishing and have an extra long weekend. But unfortunately, we're still in lockdown, so that's not happening.
Sad.
So yeah, not much planned otherwise.
No pumping
Probably
iron.
mow the lawn for the 100th time. In
Pumping
lockdown.
irons again.
No,
That's
well-
like breathing.
Well, I'm not even allowed to go to the gym. So it's been a few weeks.
Just
since I've
carry the
done that.
lawnmower
Yeah.
and do like cleans.
Yeah, I'll make sure it's turned off though.
Yeah. Spinning blade.
Yeah, I'm actually I'm going to be doing a Movember video tomorrow. Try and recruit some more people for that course.
Nice.
So that should be good fun. But not much else planned outside of that.
Tom, get some cement, get a mold for a stone,
Atlas stone?
and do it at home. Yeah, you'll be fine.
Okay, I'll work on that.
Get a full like concrete like cinder block gym outside.
There you go.
Be great.
Hmm.
Yep.
Yeah.
Or go to like I guess you can't leave the house, but I was going to say go to like a meat refrigerator like Rocky Balboa and like
Oh wow.
beat up the meat. not in that way.
Yeah.
Wow.
Jeez. No comment.
Oh
Right.
goodness.
We got another
Should we-
question or what?
Let's
We
do
could
one
end on
more.
beating
So,
the meat.
so Sandeep, the last one. Is this cloning portfolio? I think it's just virtual, right, Tom? You're not putting real money into this yet.
I mean, I have real money in a lot of the stocks that'll probably end up in that portfolio, but
Sure.
that's a hypothetical $100,000. Yeah.
Yeah.
Oh, you should have put some of that disposable income. We got all these super chats coming in. That could be the punch card portfolio, the cloning portfolio. That'll be fun though to like actually track it in real time. That's what's so frustrating about, like Brad and I do like the magic formula stuff. It's like, yeah, you're back testing over decades, but it's like, what about now? Like, is it still viable now that everyone knows about it? And I guess that's the whole challenge of investing is like, you never know what the future's really going to hold. And, but I always love those kind of ongoing tracking sort of things.
Totally.
Yeah, it should be good.
Are we doing a
I've seen a
punch card
few sort
portfolio?
of. We can do a punch card portfolio.
Our fund. Do we have one that?
Yeah.
Do we have one that we
No, we
don't
gotta
agree
wait.
on?
We gotta wait for the spec.
Alibaba.
Do we need to agree?
I guess so. Yeah, we do all own Baba.
We'll
There
just
was a
pick one
comment
each.
earlier on in the stream saying we should do a punch card portfolio
Yeah.
and do anonymous votes to decide whether a stock goes in or not.
From our audience?
That would be
From
intense.
us five.
Oh, from us. Okay.
Okay, that's actually a good idea. So, what
Wouldn't be a
maybe?
punch card if it was from the audience, right?
Yeah, those might get a little too
So,
broad. So, what
three
we
of
do?
us-
We do like 4 votes or 3 votes? Probably 4, so
Well,
it's like real concentrated. Like
3.
it's got 3 votes. So
Three's
only
majority.
Majority.
Yeah.
Yeah. Oh, how about super majority?
Could we do that?
Someone-
Maybe how often
Jack's
would we
got
add
veto
to it?
power.
No. You just need 4 or 5. So like, yeah, I'm the judge. I'm the arbiter.
Twice a year.
And we're going to use ShareSite for this, right? Like shares.
Yeah,
think-
we use
You plug some affiliate.
sharesite.com/.
Yeah, we're not
Slash
sure
punch
whose
card.
Invest in the
referral
frame.
we're going to use yet. Yeah.
We'll just make a punch card.
We'll get a
one.
punch card one.
Yeah, the generic
Yeah.
one. If you guys
fun.
like that idea, everyone watching, if you guys like this idea of us doing some sort of portfolio, we'll figure out the mechanics, but a portfolio that we track and we'll give, I don't know, quarterly updates, monthly updates, something, just checking in. Let us know if you like that. Put it in the comments after we close out this live stream in the next minute or two. And we'll, we might put out a community post too to get a good feel of what you guys think about the idea.
Sorry, if we get 1,000
I like-
comments, we'll do
I
it.
like Jason's comment.
Only 1,000? How about 10,000? What was the challenge? We needed like 10,000 likes to do.
No, it wasn't
500
something.
it was.
10.
It was
No,
500.
500 likes. 500 likes to do a special
5.
talent.
For Frank to put his girlfriend in an armbar, I think was the jiu-jitsu skills.
Jesus.
Yeah.
All right. We'll wrap it up there. If you guys liked this video, please smash the like button, hit the subscribe button if you haven't already. We put out a new video every week around this time, wherever that is for you in the world. And hit that bell notification so you don't miss the actual live stream notification if by chance you're awake and available when we do go live, because we love getting your guys' thoughts, questions, and comments in the chat. Since it makes the conversation that much more lively. Speaking of conversations, you can continue that down in the Discord in the description below. If you haven't joined that already, that is always lively. I have trouble keeping up with it at this point because there's so much going on in there. A lot of good back and forth on different stocks and value investing topics. So check that out too. Otherwise, this has been Punch Card Investing, and we'll see you guys next week.
Thanks, guys.